Most traders think they understand how demand zones and order blocks work, but they are completely missing the real reason why price moves the way it does. Today, I am going to reveal a secret that smart money uses every day, a hidden pattern in the market that shows exactly where price is going to react. If you watch carefully until the end, you will see how price returns to one critical area, fools most traders, and sets up the perfect trade. And why this is the key most people never notice. The first step before any trade is to identify the major highs and major lows on the chart. These areas are not random. They are where smart money hides liquidity, where stop losses are resting, and where the next big move is often prepared. Most traders ignore this step, which is why they often get caught on the wrong side. If you can spot these highs and lows correctly, you are already seeing the footprints of the market's next move before anyone else even realizes it. Once we have the highs and lows, the next step is identifying the order blocks, demand zones, and points of interest. These are the areas where smart money accumulates positions before the next big move. But here's the catch. Price rarely reacts immediately. Instead, it creates subtle, fake movements to trick most traders into the wrong side. If you can spot these zones correctly, you'll see exactly where price is likely to react next, giving you an advantage most traders don't even know exists. Now that we've marked the zones, let's look at the blueprint of how price actually moves. Price often reacts from a demand zone or order block, moving upward and giving the impression that the trend is bullish. But this movement is rarely straightforward. The market creates subtle pauses and fake moves to confuse most traders. If you understand this blueprint, you'll start to see where smart money is preparing the next real move, long before retail traders even notice it. Now comes the first major clue most traders completely miss, the break of structure. Price moves upward from the demand zone, making traders believe the trend is bullish. But this break is often designed to hunt liquidity and test where retail traders place their stops. If you can spot this early, you'll know where the market is really heading next, while most traders are still guessing. After the break of structure, the market begins to reveal where buy-side liquidity is resting, above the previous highs. Most traders see the breakout and assume the trend will continue, but smart money is actually collecting liquidity before the real move. This subtle shift in market structure is a hidden clue that tells you exactly where price may react next. If you can spot it, you're already steps ahead of retail traders, seeing the market's plan unfold in real time. Now price returns to the point of interest, order block, or demand zone, the exact area where smart money has been preparing the setup. This is where most traders hesitate or guess, but if you've been following the blueprint, you'll notice subtle reactions that reveal where the market is truly heading. Price often pauses, reverses, or tests this area just enough to shake out weak traders before the real move begins. Understanding this reaction is key. It's where the high probability entry for the trade forms. After price returns to the zone, it creates two types of inducements designed to fool most traders. The minor inducement is a small, subtle move that shakes out weak traders who enter too early. The major inducement is a larger, more obvious fake move that traps retail traders who think the trend is continuing. Smart money uses both to collect maximum liquidity, leaving the majority of traders on the wrong side. If you can spot these, you'll see exactly where the real high-probability trade setup begins. Once price touches the demand zone or order block, it begins to react from this area, confirming that smart money is active. From here, price moves toward the buy-side liquidity, BSL, above the recent highs, the exact area where stops and breakout orders are resting. Most traders see the initial reaction and hesitate, not realizing the market is setting up for the next major move. If you understand this flow, you can anticipate the move to BSL before the crowd even reacts. Now that we've understood the blueprint, how highs, lows, order blocks, and demand zones create setups, it's time to see this in the real market. We are going to analyze an actual chart where price reacts exactly like our blueprint. Watch closely because the subtle moves, breaks of structure, and reactions here reveal exactly where smart money is acting and how retail traders often get trapped. If you follow carefully, you'll see how to spot the high probability zones before others even notice them. On this chart, the first step is spotting the demand zone, order block, or point of interest in the lows. This is where smart money has been quietly accumulating positions, preparing for the next big move. Most traders completely ignore these zones, entering trades blindly and getting caught in small fake moves. If you can identify this area correctly, you're already seeing the market's intentions before it even reacts, giving you a massive advantage over the crowd. After marking the demand zone and order block, the next clue is the break of structure. Price moves and breaks previous swing highs, making many traders think the trend is continuing. But notice carefully, this break is often designed to hunt liquidity and test where stop losses are resting. Most traders react too early and get trapped, while those who understand the market can anticipate the next real move. This is where the blueprint from before comes to life in the real market. After the break of structure, price begins moving toward the buy-side liquidity, the area above recent highs where most stop losses are resting. Many traders see this reaction and assume the trend is continuing, but smart money is actually collecting liquidity and preparing for the real move. Notice how price pauses and subtly tests this zone. It's a hidden signal that tells you where the next high-probability trade will form. If you can read this, you're already ahead of retail traders who are still guessing the market's next move. After price reacts from the demand zone, it often creates a minor inducement, a small, subtle move designed to trap early traders. Many retail traders see this tiny move and think the trend will continue, entering too soon. But in reality, this minor inducement is smart money's way of shaking out weak positions before the real move begins. If you can recognize this, you'll know exactly where the high probability trade is forming, while most traders are still guessing. After the minor inducement, price often creates a major inducement, a bigger, more obvious fake move that tricks most traders into thinking the trend is continuing. This is where retail traders get trapped, entering positions too early while smart money collects maximum liquidity. The market makes this move look convincing, but if you pay attention, you can see the real setup forming behind the scenes. Recognizing this major inducement is key to knowing where the high probability trade truly begins. After observing the minor and major inducements, the high probability trade setup becomes clear. Price reacts from the demand zone, confirming that smart money is active, and begins moving toward the buy-side liquidity, BSL, above the recent highs. Most traders are still confused or trapped by the fake moves, but if you follow the blueprint carefully, this is the moment to enter the trade. Entering here gives you the best chance to ride the real move, while others are left guessing the market's next step. And that's how smart money sets up the market, from demand zones to inducements, and finally to the high probability trade. If you learned something new today, make sure to like this video, comment your thoughts, and share it with traders who want an edge. Don't forget to follow Discount Trader for more real market examples and strategies that most traders will never see. And if you want a sell trade execution video explained exactly the same way, comment below and we'll make it for you. Stay alert, watch the markets closely, and remember, the best trades are often hidden where others are blind.